So the market clawing its way back up, nearing the 21,000 psychological mark, some people would argue. Is it going to get there soon enough?
Well, I guess it's, I mean, you've had a couple of results come out. I mean, many of the Q3 numbers were okay. There were one or two disappointments there, but overall, I think the results look good enough to take the market up to 21,000.
Absolutely. And the currency is also looking a lot better. Is it largely because of international factors, you know, a Eurozone solution? Or is it something within Nigeria, all those fundamentals around interest rates and regulations and restrictions being lifted on the money markets?
Well, that could be part of it, but we have to realize that the federal allocation for the month of September has not been released because of all the debates between the states and the federal government over the petroleum subsidies and NNPC withdrawals. So all that money hasn't hit the system. And I guess part of it is that would have found its way into the dollar FX market hasn't gone in there. So that might explain part of the reason why the Naira is strengthening right now.
All right, what's happening on the fixed income side of the market, Egie? Because this is really where we've seen the market being lifted in many, many respects.
Well, there was a T-bill auction this week, 91-day auction at 15.29 with a bid cover ratio of about 3. So many people missed out on that stop rate. The 182 and 364-day bills were over 16%, which is slightly higher than the previous auction 2 weeks earlier. So on the short end, rates seem to have gone up on the auction side. But the long end is really where it's quite interesting. After the DMO auction last week, which was very, very high, I mean 18% for 7-year, 16.3 for 2015 bond, those rates have come down substantially. And now we're seeing trades for 2015 under 15%, and 20-year bond trading as low as 14.2%. So the rates have improved, prices have gone up, and the numbers of last week seem like just a blip.
I mean, talking about the debt management office's auctions, we know that this year alone they've auctioned somewhere in the region of 630 billion naira. It's an improvement of 16% from figures we saw last year. And a large component of that is the pension funds very active. So government securities looking attractive because of the yields you're talking about, but just a safer option compared to what we're seeing on the equity side.
Yes, I mean, when you start seeing yields like, I mean, 18% on a 7-year, I mean, you technically double your money in less than 5 years. Those kind of numbers are very hard for investors to ignore, particularly long-term investors. So the competition from the government side clearly has been very stiff, but those rates are slowly moderating.
Now, recent inflation figures coming through, what bearing will they have on the fixed income side of the market? Because it was a bit of a disappointing figure for the last month. Not a major rise in inflation, but a sense that the trend is reversing.
Well, I don't think those numbers have very much to do with the fixed income market right now. I mean, no matter how you look at it, the interest rates have gone back to being positive in real terms. So you have 10-point-something inflation, you're having 15, 16, 17% interest rates. Those are very positive rates. You haven't seen those kind of positive spreads in a while. So even if inflation inched up, I don't think it will have any impact on the fixed income market.
Egie, there have been calls also for more corporate bond issuances in the market. What bearing will the current yields we're seeing on government securities, for instance, have on the rating of some of these bonds?
Well, the challenge on the corporate side is interesting because many of the blue chip corporates who should be the first to issue just because of their high quality or high credit quality can borrow from banks at very attractive rates that are significantly below what you're seeing the federal government bonds trade at. So if you're a big quality corporate that you can borrow at 13 and a half, why would you issue a bond at 16, 17? So those quality corporates have no motivation to issue right now. But again, as those FGN rates start to come down, it might become a bit more attractive for those corporates to go in. Because no investor is going to buy a corporate bond yielding less than a federal government bond. I
mean, you mentioned these federal allocations and debates going on around the removal of subsidies. It's a huge issue in Nigeria, and we expect, as part of the deregulation, some of these issues to start kicking in 2012 first quarter. How significant an impact is that going to have on the fixed income side of the market? What kind of a fallout are we going to see in Nigeria's economy?
Well, I mean, this subsidy debate is not new. It's probably, It goes back as far as I can remember. The government has always said there's been a subsidy, and even when petrol was like 1 naira, there was supposed to be a subsidy. So the debate was going to continue for a while. If it actually went all together, a significant portion of the government expenditure will, in theory, disappear, and maybe in theory, the DMO debt issuances will be a lot less, because when you're spending over ₦1 trillion on petroleum subsidy and you're issuing probably close to ₦1 trillion in bonds, then if you don't have to spend on that subsidy, maybe you don't have to issue those bonds at all. But only time will tell. The subsidy will not be removed at once, all at once. So if it's a gradual removal, we might not notice that impact on the DMO debt issuance.